Hi everyone. To compete in the corporate world, everyone draw their attention to gain more profit with minimum cost and leveraging other resources, as well as facing the risks in fluctuate market. According to the article, disclosure of voluntary accounting ratio by Malaysian list companies, performance and voluntary disclosure of accounting ratio is useful to make financial report, especially association are texted between the extent of ratio disclosure and company performance. Collected data has been used to make hypotheses of the company. Many companies voluntarily disclosure in an effort to distinguish their product from their competitors. Some others try to raise additional capital. In Malaysia, disclosure of voluntary information in the annual report is encouraged by the Malaysian Accounting Standard Board. First of all, let's see the significant objective of the article. According to ratio used to assess the ability of a firm to pay its debts and to evaluate a business and its material success. As well, ratio analysis can be used to forecast the efficiency and profitability of a company. Also determine to financial position and useful to avoid business failure. As well, drawing on agents relationship is present voluntary ratio disclosure in associated with the performance of the company. Financial variables are used by namely firm size, leverage assessed in place, type of auditors and sectors of company to increase the performance and the quality of investors influencing the company. Prediction can be present in cooperative failures, credit rating, assumption, risk and the testing of the economic hypothesis by analyzing financial variable. Accounting to ratio is useful for decision making process along with accurate information. Now let's see about hypothesis development. First, company profitability. There is a positive relationship between profitability and disclosure. It has an effect that managers of profitable firm will disclose to continue their position and compensation arrangement. Also, the management with good news is likely to disclose more information than management with bad news. That would appear positive association exit between profitability and extent of radio disclosure. Next hypothesis is leverage. Leverage point out long-term risks of company. If leverage of a firm reach high level disclosure, increase the risks due to the management fear and lack significant. Another hypothesis is the size of the company. There is a positive relationship between company size and the extent of ratio disclosure. The large companies have to face gather public inspection will disclose more in an attempt to reduce agency cost, as well as small companies involve higher costs for disclosing voluntary information. According to the ratio is typically compared with the stand under the positive accounting theory. As well, under the positive accounting theory, ratio is used for predictive purposes. So, what is positive accounting theory? Positive accounting theory is looking forward to explain and expect future prediction in accounting practice. Ball and Brown introduced this theory into the accounting world in 1986. Ball and Brown found out that if the firm expected to gain more money and had earning announcement which was positive, their share price went up. If firm does not accept lot of money or had an earning announcement which was negative, the share price went down based on the efficient market hypothesis. What are the main features of positive accounting theory? Fact is focusing on the relationship between various individuals and which method wants to use in accounting to assist resources in the firm. For an example, the relationship between owners and managers, or the relationship between managers and the company debt providers. Many relationships contributes the delegation of decision making from the one part to other part is referred to as an agency relationship. The business has managers who are employed by owners, but owner can't expect that managers gives his fully effort to build up the and run the business. So, owners has to monitor them and bomb them by asking to prepare financial reports or getting some contractual arrangement. In this case, cost is emerged and we identify it as an agency cost. There are three types of agency costs. They are monitoring cost, bonding cost and residual cost. According to the article, Disclosure of Voluntary Accounting Ratio by Malaysian List Companies, Performance and Voluntary Disclosure of Accounting Ratio is useful to make financial report, especially association are texted between the extent of ratio disclosure and company performance. Collected data has been used to make bonus band hypothesis describes if managers are paid a bonus based on reported earning, they have incentive to manipulate reported earning upwards or downwards depending on what their bonus situation is. Managers always like remuneration packages with salary more than fixed basis salary. Debt hypothesis describe if a firm is very close to break its debt covenant or firm want to extend their loan with the bank, then make the managers to incentive to handle reported earning upwards or overestimate their assets. Political cost hypothesis is mainly according to comes from size. If a firm gains more money, it attracts political attention. That brings government attention. As its result, firm has to face to government lobby, increase taxes, increase wage claims, and super profit tax. So, firms want to adopt accounting method to reduce profit to gain lower political attention. Now, we will draw our attention to Loeb's hole of positive accounting theory. First, the lack of prescription. It does not provide prescription and does not provide a means of improving accounting practice. PACT is not value free as it asserts assumptions that all actions is driven by self-interest. As well, it relates to the fundamental assumption that all action are driven by a desire to maximize one's wealth. It's not good. Individual choices considered more than many choices. Not only that, the measurement or proxine being used with the literature are often far too simplistic. In undertaking large-scale imperial research, positive researchers ignore many organization-specific relationships. In nutshell, Malaysian list companies, according to positive accounting theory, they created hypotheses for companies' profitability, leverage and efficiently, and they were analyzed from each company's getting the samples. Positive accounting theory normally consider urgency relationship and urgency cost. Positive accounting theory mainly consider hypotheses to make future prediction. As well, if there are many circumstances of the positive accounting theory, it make a big revolution to create today economic global village. Thank you for listening. Have a good day.